Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. And guys, one of the best day trading sessions that I've ever experienced in my entire life happened today. So we're going to be talking about the two positions that we took, the entries, the exits, giving you guys my full strategy on this. So I hope you guys all enjoyed this. If you do, smash that like button and subscribe. And if you guys want to learn more about day trading and swing trading, check out our school. It's called the Swing Trading Masterclass. We have private live streams where you guys can ask questions, voice concerns, and we talk about stocks with opportunities, stocks that I'm holding. We have a group chat. So if you have any questions, you can have, like-minded individuals answer you. I'm in it, so I can answer. It's fantastic. And guys, 50% off using code FIRST50. The first 50 people get that code. Get 50% off. So check it out down below. We have all this exciting stuff that's going to get added to this, like shorting positions, like more day trading stuff. Right now, it's really, really dialed in. So check it out down below. 8-week course, hours of lectures, final exam, quizzes, all that stuff. So check it out. I'll see you guys in there. And let's jump into this here. All right. So this past day here, let's go ahead and pull up our handy dandy trading journal here. You guys can see that the two positions that we took was Tesla, $1,600. I'll take that any day of the week. Then we got SoFi, which is $108, so little over $1,700 in a single day, which is awesome, bringing our monthly total for our large account to $5,405.25. And this is what we do, right? We're not the trading community where we're going to find a stock at $1 and sell it for $100,000. We're not. We're going to find a stock at $10, sell it for $1 or $10.50. We're going to find a stock at $200 and sell it for $215, right? Consistency beats anything, beats getting rich quick, beats anything. So focus on consistent gains. So, all right, let's talk about stock number one. So stock number one here is SoFi Technologies. Our lower stock here, making us about $100 here today. So this approach here was something called a pre-market gap breakout strategy here. So what we did is we marked out the pretty much the high of the pre-market. As you guys can see, it was near and around the 1257 mark. So that was our entry point, getting in for that breakout, going up, setting our stops below these moving average lines here to ensure good risk management. Now, we also want to make sure that there's still some sort of upward trend, which is exactly what we saw. I am a huge believer that the trend is your friend, and a lot of traders don't pay attention to it. So it's always smart to look at, the trend of the stock here. So now here, as the stock popped up above the, the pre-market high, we got in on the position, kept moving our stop loss up and up and up, waiting for the previous low for the stock to pass it. So you guys can see the low of this candle was right here at 1277. The stock popped down below that. That was our entry point. That was the only time on this ramp up where we had that dip below the previous low of the candle on the 5-minute chart. Now, obviously, we also did look at that hourly trend, and you guys can see beautiful trend line. We also looked at the daily, which had a beautiful trend breakout. This would have done very, very well for possible swing trade. But you guys know right now for like swing trades, there's a lot more risk involved because you're holding positions overnight that honestly that could squeeze up either directions. If there's new tariffs, reciprocal tariffs getting paused, added, whatever it may be, the stock market's very, very influential on that. So for me, to reduce risk, I've been just getting in and out of positions during the same trading day here. So the next stock here is going to be the one and only Tesla. Tesla, you guys will notice, very similar approach. Stock on an upward trend, has this beautiful, beautiful support down here at 223, popped up above that general downward trend, establishing a huge trend line breakout here. Now, as we go to lower time frames, you guys can even see the heavy support zone, heavy resistance for swing trading, mind you, because often you're going to be buying and holding this for several days. But today we're just making sure that there was still some sort of support here on this trend. So you guys can see each and every time it hits this trend line, we have buying pressure. So buying pressure, buying pressure. Recently sold off, back down to that trend line here. Okay. So now here we have that beautiful trend on the hourly time frame. And if we even go and look at a lower time frame here, okay, this is the 5-minute chart. We bring our moving average lines back. Moving average lines have tendencies of acting as support and resistance, okay? So here you guys can see it sold off down to that zone, okay? My thought process was this: entering at 261, keeping our stops below 258, because look at all these support lines we have. We have moving average lines. We have the pre-market low and support that could act as support here, which it did. Also, let's go ahead and zoom out a little bit. Also, we have a beautiful upward trend. So now, as that stock sold off, I even said, hey guys, in the group, taking a nice little trade on Tesla. Okay, rallied its way up. Boom, 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 boom. We had this zone right here. Okay, so now as the stock is going up, there's several different ways you guys can thin out your shares, get out of your position, whatever it may be. So one of the things that I wanted to do was to see how this stock would react to this first Doge. So this is it's called a Doji Star. This often is actually a trend reverse candle. I wanted to see what this next candle would do and move our stop below that. Okay, so now we kept our stop relatively tight because honestly, we wanted to have good risk management. So now that stock's rallying its way up, we had our first huge red candle dip down, and this was our low down here. And this is kind of where we started thinning out and got out of the trade. So we held through this consolidation zone, found some decent support here, as you guys can see. And honestly, I was more or less just moving our stop in this range, to be honest, to see if it would cover this full gap right here, because I also saw just the general market getting picked, a lot of buying pressure behind it, and I thought for sure we were going to have this kind of start happening, but it didn't. And that's the thing about trading, is you'll never be able to buy at the peak, the peak bottom, sell at the peak top. As you guys can see, we would have made, like $4,000 if we would have bought at the peak bottom down here, sold at the peak top. But that's the thing about trading, is you're just capturing short-term momentum that you understand, right? If I would have held this position all the way up here, my risk would have been super high because I'm holding into unknown territory. So that's why we got out for a solid profit, and a really, really nice return. Now looking back, we could have actually used like that 50-day moving average line as support here, as you guys can see with our stop loss. But we're learning, right? We're learning as we continue to take from the market. So you guys can see that yellow line and that blue line, heavy support here. Boom, boom, boom. Hit it as support. We should have just continued to move up and wait for the dip down below it. That would have done very, very well, but it also could have gone bad. So it worked out well, though, for us today. So, guys, I hope you guys all enjoyed this. If you did, smash that like button, subscribe. We'll see you guys in the next one. Hope you guys enjoyed it. Like, subscribe, and check out our school. We'll see you guys in there. Take care.